Good evening, everybody. I'm Bill Griffith, in again tonight for Tyler Matheson.
And I'm Susie Garrett. Good evening from me as well. Two new records on Wall Street today as investors still feel good about the Federal Reserve's policy on low interest rates. What about unrest in Iraq? Investors seem to be shrugging that off for now. As a result, both the Dow and the S&P settled at new records, while the NASDAQ closed at a 14-year high. Here are the numbers. The Dow added 25 points and is closing in on the psychologically important 17,000 level. The NASDAQ was up nearly 9, while the S&P scratched out a 3-point gain. For the week, all three indexes rose at least 1%. The S&P was the leader, up 1.4%. And with summer about to begin, Morgan Brennan tells us some stocks sizzle more than others when the weather heats up.
Sell in May and go away. It's a Wall Street mantra meant to avoid seasonal declines in equities. But there's a number of stocks that actually do better in the summer, posting on average double-digit gains from Memorial Day to Labor Day, and that have been doing so for the past 5 years. Take Apple. The tech giant has traded higher each of the last 5 summers, garnering a 15% return. Investors tend to pile into the stock ahead of September, when Apple typically makes product announcements.
This is likely to be a summer that will be an Apple kind of a summer, in that they've got a new cell phone coming out that's going to have the new iPhone's going to have a larger screen, particularly for baby boomers and for people who like an easier read on their smartphones.
Since summer is peak vacation season, travel and leisure companies also perform well. Online travel sites like Priceline and Expedia have typically pulled in 26% and 14% returns, respectively. Also, gaming stocks like Wynn, and some experts even like amusement parks.
Leisure stocks, in particular, we would think of Six Flags, an affordable luxury for families who are homebound this summer.
Hot weather makes consumers thirsty. That bodes well for beverage companies like wine and beer maker Constellation Brands. That's accounted for a heady 20% return. And Keurig Green Mountain, best known for its K-Cup coffee pods, has averaged 17% during the summertime. But pay close attention to energy companies, especially now that Iraq has sent oil prices higher.
You tend to have the driving season, so demand for gasoline goes up, and energy stocks also tend to rise. So if you're looking for a seasonal bias trend, it's definitely energy.
But energy companies can be volatile, closely tied to crude oil and other commodity prices. It's also important to always look at a company's fundamentals, despite historic patterns or the season. And some experts have predicted a stock pullback, something to keep in mind even as indexes continue to hit record highs. For Nightly Business Report, I'm Morgan Brennan.
Well, Mike Holland believes that stocks are in a bull market. He doesn't see a correction anytime soon. He's chairman of his own money management firm, Mike Holland and Company. Michael, Janet Yellen this week took a rather unusual step as Fed chair by publicly stating that she didn't think that stocks were overvalued. She thinks they're appropriately valued for the economy right now. I take it you agree.
I do, Bill. You know, we've been in a bull market since the bottom 5 years ago. The Federal Reserve said they wanted to lift stocks and bond prices. They've done it. She said it again this week that this is a main portion of why I remain unconvinced that we're due for a bear market in the near future. She has said this week, along with the rest of the Fed, that they're going to continue to support this market. I don't need to know a whole lot more than that. There are actually 2 other factors among the 3 factors that caused me to be this way. The second one is the negative psychology that began long before 5 years ago at the market bottom. People still don't like stocks overall. There are some sentiment surveys that are getting a little toppy right now, but overall people still are very skeptical and cynical about stocks. And then the last thing itself is the Fed. If the Fed stays where it is and we continue to have the valuations where they are, as Janet Yellen said, valuation plus the Fed plus negative psychology equals a market that isn't likely to be in the bear phase in the near future.
But, Mike, you saw this week the one concern that was in a lot of the conversations about the outlook for the markets was inflation and Fed policy on that issue. You know, how can we be sure that inflation is not going to be getting out of control? Where do you stand on that?
So it's exactly the right question, because people I respect, and there's some who've been more right than others over the years, are saying that they think that if we do get a significant correction in this bull market in the near future, it will be an inflation scare. We get the PCE number next week, which is what the Fed looks at. If that's higher than people suspect, they will immediately say, oh, the Fed is going to have to change its policy and tighten sooner, therefore we should sell stocks. So sometimes it gets pretty simple. This has been the easiest bull market of my long career, and I don't think the inflation bogey is going to come out and actually do some damage in the near future because of the things that Janet Yellen said this week about why inflation is not her worry.
For the most part, it's the defensive stocks, as they're known, that have been leading this rally lately. You know, those stocks that don't expect much growth in the economy, those stocks that pay a pretty good dividend, you know, those stocks that people go to for slow but steady growth. Is that where you are right now, or are you expecting stronger growth here?
I don't expect stronger growth for all the reasons you report every day, Bill, but I think that that way you describe what's recently done well is kind of a description of the overall economy, not only in the U.S., but globally. It's slow, grudging growth. It's not really a Goldilocks economy by any stretch, but it's continuing. We're going to get 9% earnings growth this year, maybe 10% in the U.S. It's not enough to make people pop champagne corks, but it's enough to keep stocks undervalued at 15 times next year's earnings.
I just want to squeeze in one last question, and we have half a minute for it. It's important. Iraq. I mean, at what point does this violence in Iraq or any other developments there become a problem for U.S. markets?
What used to be referred to, Susie, as the exogenous factor. Absolutely. If we get this thing spiral out of control, which is entirely possible, it's one reason I always have cash, because maybe it'll happen. If it does happen, I'll have some cash. But that takes us oil to 150, 200, 250 when craziness happens. Yes, all bets are off. And so for the people who actually have stayed in this bull market for the last 5 years, you probably should have some cash in case something like that happens.
Okay.
Yeah. Michael, always good to see you. Thank you.
Thank you, Bill. Thanks, Susie.
Mike Holland and Company.